time for a look at the week ahead for the markets, thanks to our partners Forsyth Barr. Zoe Wallis, Forsyth Barr investment strategist, is with us now. Zoe, thanks so much for being with us. So we've got New Zealand's GDP out this Thursday. Pretty important announcement. What are we expecting out of that?
Yeah, good morning, Michael. Look, what we are expecting is a pretty decent rebound in Q3 compared to what we saw in the second quarter. So if you remember, in the second quarter of this year, growth fell 0.9% Q on Q, which was a pretty meaningful contraction. What the sort of market consensus is looking like for this year is that, this quarter, September quarter, is that we are looking at GDP growth rising at about 0.9%, so quite a big rebound. That would tie in with some of the more positive cyclical turning points that we're seeing coming through in the economy and from company reporting as well. However, it will be a bit of a volatile release in our minds due to we are likely to see some historical revisions to data, possibly revising up that big negative in the second quarter. Plus, this can be a bit of a choppy quarterly release as well due to benchmarking exercises, etc. as well. So I think really importantly for the Reserve Bank, we'll be looking through what they're seeing in the fundamental sector results that we see out this week, plus also just keeping an eye on the forward indicators. Yeah,
so last time we saw those big drops in manufacturing, construction and primary industries. So are you saying that there's clear indicators that things have improved markedly on the results posted in June?
Yeah, and look, I think, Westpac did a great piece looking at the seasonalities and some of the sort of unpredictability of that Q2 GDP release as well. So I think there's certainly potential that that gets revised up compared to where we actually saw that print come out. I also think that you are seeing some of those sectors really turn. So if you look at the ANZ business confidence surveys and actually reported activity, if you look at the Business NZ performance and manufacturing sector data as well, you're starting to see a pickup in terms of manufacturing activity and forward orders. You're also seeing, ongoing strength in terms of the agricultural and generally export sectors as well as things like retail spend and also building work put in place start to turn a corner as well, which has been quite positive.
Yeah, and we've got the half-year economic fiscal update tomorrow. So how are we looking for that?
So that's going to be an interesting one. I think, when you think about where we are versus where we were at May budget, we've seen a bit of a weaker starting point, and that will purely be driven by that Q2 GDP data release and, weaker growth over the first half of this year. Regardless of what comes out with stats on Thursday, they will roll with those existing numbers. So that gives you a bit of a weaker starting point for the economy. I think one of the most interesting bits will be whether the government's still forecasting return to surplus in 2029 fiscal year, or whether that gets pushed out a bit from here.
Yeah, okay. So there's still a fair bit of uncertainty. So what do investors need to consider looking forward into 2026, or is it too soon to sort of say?
Well, yeah, 2026 is very much almost upon us. So look, we're just sort of looking ahead to the year ahead. And I think what we're seeing already and what we expect to see ongoing in 2026 is probably a bit of a rotation. And by that, I mean, we've seen artificial intelligence technology stocks have really been powering markets higher for the last 3 years. What we see ahead is that we're going to see a bit more, healthy skepticism come into that sector, a bit less hype perhaps. And you've already seen that really in the last couple of months as well. And a bit more of a rotation. So we're feeling a bit more positive, particularly around the New Zealand market as we go forward. And that's on the back of, improving cyclical backdrop, improving micro fundamentals, cost cutting, bit of work being done on balance sheets over the past few years, and starting to see some of that more positive forward guidance come through from New Zealand domestic companies as well. So overall, I think a rotation in terms of, high growth, exciting tech sector, into probably some other areas like property and infrastructure, as well as New Zealand listed equities having a better year ahead after a pretty tough couple of years.
Zoe, really appreciate your time as always. That's investment strategist Zoe Wallis. Thanks to our partners, Forsyth Barr.